Now to the stock frenzy involving GameStop. We first told you about this yesterday. A group of amateur investors increasing shares of GameStop and other companies that hedge funds were betting against. Joining me now is NBC News senior business correspondent Stephanie Ruhle. Stephanie, so glad you're joining us. Everyone is talking about GameStop. We're talking about a struggling video game retailer somehow becoming one of the hottest stocks on the market. How did this happen?
And that's what makes it really an extraordinary story, something we have never seen before. In the last year, think about it. People were home, especially young people, in front of screens. And their disposable income that they might spend going to sporting events or bars or on trips, they weren't doing that because of COVID. And they got interested in trading. And now it's become a lot easier to trade with mobile apps like the platform so many were using called Robinhood. And there were chat forums like on Reddit. There was one that had 3 million subscribers, Wall Street Bets. And on that chat room, they learned a few months ago, you said it, there were major hedge fund managers out there who had been shorting GameStop and a few other stocks. Well, this coalition, this army of individual investors then bet against them. They started buying the stock and the shares went up and up and up. That's how that works. And when that happens, those hedge funds who are betting against it, who are short selling, got squeezed. And when a short squeeze is on, you then have to buy those shares at higher prices. So all of that momentum just sent the price higher. Now, short squeezes, not new. Certainly stocks going up in a big way, also not new. But what we have never seen is individual investors come together like that for a movement like this. Now, today has been an equally big circus. You know, last night it was the David has defeated Goliath, the little guy, stuck it to the big guy. But you have to remember, the trade isn't over. These are complicated stories. And GameStop and some of the other companies that they were buying stocks in are fundamentally not doing well. Build-A-Bear, BlackBerry, those were companies that were doing poorly before COVID happened, and now they're only doing worse. So while the share prices are now soaring, the underlying performance of the companies aren't nearly as good. And the big concern today is this momentum, this reckless trading, could mean those share prices are going to collapse, and there's going to be a lot of pain in the markets. And one of the results we've seen today, Robinhood and some other platforms have frozen trading completely following all this volatility, and this has infuriated these individual Robinhood traders and a lot of lawmakers saying, again, why are you leaving the little guy out? Why can't we buy more? The system seems rigged. Well, there's some lawmakers that are calling for hearings.
Yeah, certainly a lot to unpack here, Stephanie. Your thought on what this means for the market as a whole?
For the market as a whole, if you go outside of these names, things are okay. Remember, with interest rates at zero, investors really have nowhere else to go but the stock market. You don't earn anything if you're saving. But the real thing to think about, because I know when you look at stories like this, we all kind of get itchy. We all want to make a quick buck, don't we? Like, hey, we can buy AMC stock and it'll go up 50 bucks. I want to get in. Remember, historically, day trading does not work. That is like going to a casino. If you have money to invest and that money needs to be money you're willing to lose, then invest in businesses that you've researched, that you've studied, that you're interested in participating in this investment for the long term. Trying to beat the stock market, it's kind of like trying to beat the casino. And for the most part, the house always wins.
All right, NBC News senior business correspondent Stephanie Ruhle, we certainly appreciate your insight on this topic. Thank you.
Thank you.